Welcome to the Legacy Leaders Podcast. Are you doing the best for your client to help them create their legacy? Are you creating a plan that goes far beyond finances to help people ensure that it becomes the driving force behind all decisions? On this podcast, hosts Katie Beth Hand and Stan Miller will help you with growing your practice and your clients' peace of mind. Together, they bring the best and brightest minds to share with you how to help your clients develop their best legacy. And now, here are your hosts, Katie Beth and Stan.
Well, hello, everyone. This is estate planning attorney Bob Bergman with another one of my Legacy Leaders podcasts. I have with me today Annrose Isaac with Wade Financial Advisory in Campbell, California. How are you today, Annrose?
I'm doing well. Thanks for having me, Bob.
Thank you very much for joining me today. I'm going to be grilling you for the next half hour or so. Not just kidding. I'm going to be asking you some questions about you and your background and your financial advisory practice so that people watching this can become better informed about options that they have out there in the financial advisory area. So why don't you take a few minutes and tell me about yourself?
Sure. And thanks again for having me. I am Annrose Isaac. I am a shareholder and I'm a senior advisor with Wade Financial Advisory, WFA for short. We're located in the heart of Silicon Valley. So we are a registered investment advisory firm, and we provide detailed tax planning, investment management, and comprehensive wealth management services to our clients. I am a certified public accountant. I'm also a certified financial planner professional. I have been in the finance and wealth management industry for over 2 decades now, and I just really enjoy what I do as a fee-only fiduciary advisor.
I see. Okay. So why did you become a financial advisor instead of something interesting like an estate planning attorney?
Yeah. So I'll say it was because I needed a good financial advisor myself. So after my undergraduate education, I worked for a couple of years as a management consultant and then went back to get my MBA in accounting so that I could pursue the CPA license. And after that, I worked at Ernst & Young, which is a Big Four public accounting firm for several years. And by this time, my husband and I had our first child. We had bought our first home, and we were starting to look at our own personal financial situation. So we were starting to question whether we were doing the right things to make our own small pot of money grow and work for us. We were being approached by insurance agents who were asking us to consider purchasing very expensive whole life policies, and I wasn't sure we needed that. I had a tax preparer at the time who was telling me that rather than saving money in my son's 529 plan account, which is a college savings account, that I should consider investing that money into municipal bonds, and that he knew somebody who could help me do just that. So those experiences made me feel as though my knowledge about business and corporate finance didn't necessarily equip me to make the best personal financial decisions for myself. And it was that realization that sparked a desire to think about a different career path and to start working as an associate advisor at a local wealth management firm, to go back to school, to start taking classes to pass the certified financial planner exam. I'd say, to be honest, making that career switch has been one of the best decisions I've made.
So it sounds like you did that out of self-defense.
Yeah.
You said, boy, there's so many things I don't know.
Right.
I should go find out about these things. And while I'm at it, maybe I should start helping other people that
yes,
know what
right.
I didn't know.
Yeah, that's right.
So what does being an advisor, a financial advisor, actually mean to you?
So as a financial advisor, I find myself at the intersection of multiple practice areas. And by that, on a constant basis, I am advising clients on tax planning, on estate planning, on investment management, on equity compensation planning, risk management, retirement planning, just to name a few. It's a privilege to be able to do this, to educate my clients and to guide them to make good financial decisions for themselves.
So how did you actually get into Wade Financial Advisory?
So after I left Ernst & Young, I was fortunate enough to start working at a local wealth management firm as an associate advisor. And interestingly enough, this was right at the beginning of 2008. And a few months later, I think it was in September of 2008, Lehman Brothers collapsed and the great financial crisis ensued. So the crisis of 2008, 2009, and what followed became my training ground in the wealth management industry. I was at that firm until 2015, when my family relocated to California. And when I got here, I knew that I only wanted to work for another registered investment advisory firm. And that's when Wade Financial Advisory came into the picture. And I started working with WFA shortly after I moved to California. And I've been with the firm since then.
Where were you coming from?
Lived in New York. I was working at a firm. It's right at the border of New York and New Jersey. So I was working at a firm located out of New Jersey.
So that's quite a shift from one coast to the other coast.
Yeah, a lot.
It's also a shift in mindset too. My family moved from Virginia to California, and that was quite a culture shock, I'll tell you.
Yeah, it is.
So,
a lot goes into that move.
Can you describe an ideal client for you to me?
Sure. So at WFA, we provide advice to really a wide demographic of clients, right? We work with everyone from younger families, younger individuals to retirees. Because of where we're located here in Silicon Valley, we have a lot of clients who need very specialized advice around equity compensation, non-qualified stock options, incentive stock options, equity compensation from pre-IPO companies, and the like. So we built a specialization around that. But I would say the common theme among our clients is that they are looking for an ongoing relationship with a financial advisor, not just looking for investment management advice, but looking for advice on many other aspects of their financial lives and looking for advice on those evolving financial needs.
So how do your clients actually find you and your firm?
So great question, and thanks for asking that. Anyone who's interested in learning more about me or about the firm can visit our website, and that's wadefa.com. So wadefa.com. There's a great deal of information on our website about the services that we provide. You can sign up for monthly newsletters that we send out. And there's also a link there to schedule an introductory call with our advisors if there's a desire to have a more personal conversation about your own specific financial needs.
So do you get a lot of referrals from existing clients?
Absolutely. Yeah. The referral base from our existing clients has been a huge part of our growth. We also have a lot of allied professionals, so estate planning attorneys and insurance agents, CPAs, other CPAs who refer their clients to us because they trust us to take good care of those clients. And then we also do our own marketing, right? Someone may have heard one of our advisors speak at an event or seen a newsletter or an article that we've contributed to, seen an ad that we put out, et cetera.
Other than those special things that you just mentioned, what are some of the common issues that you help your clients with?
Yeah, we help our clients with a lot. So I would say at the start of any wealth management relationship, we ask them for copies of many things, copies of their pay stubs, their tax returns, all of their insurance documents, all of their investment statements. We're going to ask for the full set of their estate planning documents as well. And we ask for all of this because we look at all of this and we advise on all of this. So not only do we build out investment portfolios, customized investment portfolios for our clients, but we also do a lot of tax modeling for them and give them advice on tax-wise strategies, whether that's around equity compensation or charitable giving or whatever their particular unique tax situation is that year. When I'm looking at estate planning documents for clients, I'm reviewing it to make sure that those documents are updated for current laws and also for their current life circumstances. If not, then I recommend that they speak with attorneys so that they can get those documents updated. And as Bob, when someone works with you, not only do you help them create those documents, but you give them a set of instructions that they then need to follow to implement that estate plan. And a lot of times people forget to do that.
Yeah.
And if they do that, that can have disastrous consequences to their estate plan. So behind the scenes, we're looking at those instructions that the attorney is giving them, and we're making sure that our clients are doing that, updating the beneficiary designations, retitling those accounts, all of those important things that also need to be done. Let's see, when I'm looking at somebody's insurance policies, and by the way, that would be everything from home and auto and umbrella policies to life insurance, disability, long-term care policies. I'm looking to make sure that they have the right coverages in place, and also that they don't have features in those policies that are expensive and unnecessary. And if I see that there's room for improvement, I'll educate them on some of those changes that are necessary, or refer them to, again, other professionals, insurance agents that can help them source those policy improvements. So that's toward the start of a relationship, but also nobody's financial life stays the same, right? Portfolios have to be rebalanced for market conditions. Tax laws, estate tax laws change. People move, they switch jobs, they send their children off to college, they retire, a spouse might pass away. And that's when WFA advisors are there with our clients through those changing life circumstances and helping them make sound financial decisions for themselves.
Now, I'm sure you've been in this many years now. What are a couple of the common misconceptions that people bring to you when they meet with you for the first time about what you actually do?
Yeah, so a common misconception is just that it's expensive to hire an advisor, right? And I would say it's actually more expensive to do it yourself. Some of the things I help my prospective clients understand, for example, there are plenty of studies that show self-directed investors often tend to time the markets. They create investment portfolios that are not diversified. They don't rebalance their portfolios. They miss out on opportunities to do tax loss harvesting. And perhaps worst of all, they often struggle to keep their own emotions out of their investment decisions. Mm-hmm. And all of that can lead to less than optimal investment results. A good financial advisor brings value by helping you navigate volatile markets in a disciplined, methodical way so that the wealth is available for your life goals. And again, investment management is just a small piece of the financial services that most people need. A fee-only fiduciary advisor who reviews your tax picture adds value by making sure that you're taking advantage of all of those available deductions and credits that could be useful to you, and that you're building a long-term plan to reduce your taxes over time. Someone who looks at your insurance coverage adds value by protecting your assets and by making sure that you're not paying for costly insurance products and features that you may not need. Someone who reviews your estate plan adds value by making sure that what you leave behind goes to your intended heirs in the most cost and tax efficient way. I think working with a financial advisor really frees up your time. It allows you to focus on building your own career, on doing those things that you enjoy doing. It keeps you on track to meet your goals and actually makes sure that things actually get done. So in my opinion, it's priceless.
So could you maybe take a couple minutes for
Sure.
each of the following?
Okay.
First of all, without using any names, tell me a story about a situation where everything had gone wrong, and tell me a story about a situation where everything went right.
Yeah. So stories of things going wrong there, again, because I've been doing this for many years, quite a few that I could share. But recently I spoke with somebody who had invested a large portion of their net worth into the stocks of one or two companies based on the latest hype. And when those companies' fortunes were impacted, the share prices dropped dramatically. And she panicked at exactly the wrong time and sold everything. When by doing that, she locked in essentially hundreds of thousands of dollars of losses on those transactions. And it's not uncommon to see this happen. People tend to overestimate how much market risk they can actually tolerate. They tend to overestimate how thoughtfully they can respond to changing conditions. And I understand the dynamics here, right? So people like to take a chance. They like to make a bet and see if that will work out. But what I tell people is if you're going to do that, don't do that with all your money. Don't bet the house on it, right? So consider investing the money that you need to provide a strong foundation for your long-term goals into a properly diversified, professionally managed portfolio. And then make risky bets with a smaller portion of your overall wealth. That way you're going to be protected no matter what happens with your stock bets. Another story of something going wrong, especially here in Silicon Valley, is when people exercise stock options and they don't really understand the tax implications of doing that. Oftentimes they find out too late, really, when they go to file the taxes, that they owe sometimes hundreds of thousands of dollars in additional tax liabilities. And it's much better if you're working with an advisor right from the beginning who is modeling the tax situation and who is creating a plan to help you exercise those options and then also to sell the shares in a timely manner.
I know, because with the stock options, they all have a price they're issued at.
Yes.
And if you hit the stock option lottery, and when you started and you got your stock options, they were issued at $5 a share, and now the company's trading at 150.
Yeah.
And you're absolutely right. If you don't understand what it means to sell one of the exercise and sell, how much ordinary income you're going to have.
That's right.
That you have to pay tax on. I'm sure that you've probably had people that have come that have exercised and have taken that money and either spent it.
Yeah.
Or they've gone and put it into an illiquid investment.
That's right.
And then they find out when they get the 1099 that, oh my gosh, I have how much income I have to put on my return this year?
Yeah.
And my tax is going to be how much on that? I don't have the cash anymore. It's invested where I can't get to it, or I spent it.
Yes.
See that car out there? That's what I spent it on. It's like,
yeah, I didn't know that I needed to put aside this much in extra money to pay the tax bill by April 15th. Common.
I'm curious, do you advise people on the implications of inheriting retirement plans?
Yes, and actually that's a great question and probably a success story that I can share.
Oh, I want to hear that.
Yeah, I think for your listeners, probably important to provide a little bit of background information, right? Over our working years, many of us save for retirement, and we do that by making pre-tax contributions from our salaries into our company 401k accounts. So someone who's doing that over the course of a 2 to 5 decade long career is really going to build up a sizable 401k balance. The catch, though, is that the money is only tax deferred as long as it stays within that 401k account or within a rollover IRA account. And when you start taking money out of the 401k in your retirement years, or your children inherit this money and they start taking distributions from those retirement accounts, it becomes taxable. And sometimes people think, oh, I'm going to have other sources of retirement income, so I can choose to leave the 401k money alone and avoid paying the taxes. But the reality is that you have to take annual minimum distributions from your 401k accounts, from your IRA accounts, based on a formula that is set by the IRS. And those type of annual distributions begin at a certain age. And right now, that age is age 73. So there's not a way to completely avoid taking these distributions and paying the associated taxes. And then, as you alluded to, there have been recent tax law changes that says anyone who inherits, or let's say an adult beneficiary who inherits their parents' 401k or their IRA accounts going forward, generally is required to take all the money out of those inherited accounts by the end of the 10th year after they inherit that account. Where that becomes problematic is, for example, if you have an adult beneficiary who's inheriting her parents' 401k or her parents' IRA accounts, she is potentially at the top of her career. She's already in a high tax bracket at that time. And so the forced distributions from these inherited accounts over the next 10 years are going to push her potentially into even higher tax brackets. And the end result is that a lot of the money that all of us have so diligently worked for and saved over the course of our working lives could be lost to taxes. So that's the problem. And it begs the question, if there is a way to reduce how much of our savings gets lost to taxes. And the answer is yes, there is a powerful strategy. It's known as a Roth conversion. And the way that works, so for example, I'm working with a newly retired client. They're in their 60s. And I pointed out to them that they are potentially in the lowest tax bracket that they will be in for the foreseeable future. So once they start collecting their Social Security benefits, and once those pesky required minimum distributions kick in, they're going to be in much higher tax brackets. So they could strategically take some distributions from their rollover IRA account in each of the next couple of years, pay taxes at their current low tax rates, and move the funds to Roth IRA accounts. The money will continue to grow tax deferred in the Roth IRA, but even more importantly, it can be taken out tax free in the future, regardless of how much it has grown by since the time of conversion. And this particular—
Yes, I know that can be a very, very powerful strategy.
Absolutely,
So
yeah.
tell me, Annrose, two more things. What do you like best about what you do as a financial advisor?
Right.
And what is something that is unique to you as a financial advisor?
Sure. What I like best is the ability to use my acquired skills and knowledge to educate people about the complexities of their own financial lives and to guide them to make sound financial decisions. I also really enjoy being part of the team at WFA. And what's wonderful is that because I work at a fee-only registered investment advisory firm rather than at an insurance company or a big bank or a brokerage house, I am free to give advice that is in my client's best interest, instead of giving advice that's potentially influenced by additional compensation that my firm could receive if I just recommended specific financial products to them. So I really enjoy the freedom that I have to give advice, again, in the best interest of my clients. And something that's unique to us. So in addition to being an SEC registered investment advisor, like I just mentioned, we also provide very detailed tax planning to all of our clients. And we're really knowledgeable about various types of equity compensation received both from public companies as well as from pre-IPO companies. And that specialized knowledge certainly is a differentiating factor for us. Let's see, something else that's unique to us is that we are willing to work with to provide really multi-generational planning, right? So many of our clients have asked us to consider working with their adult children. These are young adults who are starting to build their own wealth. They don't necessarily have all of the complexities that their parents do, but they still need good financial advice. And one of the things we've built out at WFA is a more limited scope service, particularly attractive to these professionals. And it's something that provides peace of mind to our clients, and it allows us to feel that we're taking care of our clients and their families.
Well, Annrose, I note on your background there, you do have the web address for Wade Financial Advisory right there, similar to what I have on my background. I'm assuming we're both not actually sitting in a room that looks like that. But thank you so much for joining me today. I've learned a lot. I've learned especially about what you and your firm do. And I know that especially in this valley, we likely have a lot of the same types of clients, a lot of people in the tech industry at all levels of the tech industry. I joke with my colleagues who are in other parts of the country when they ask about what are stock options. They have no idea what we're talking about because other parts of the country, they just don't do that. And there was a time it was, what's a 401k plan? All we do is pensions around here. Things evolve over time, and now there's tech all over the country, but still, stock options, restricted stock units, all those things are part and parcel of the Silicon Valley and probably will be for the foreseeable future and maybe into the next century as well. So, Annrose, thank you so much for joining me today. And thank you for sharing your background and what your firm does and how you help people out.
Thank you. Thanks for having me again. I really enjoyed being here.
You've been listening to the Legacy Leaders Podcast with Katie Beth Hand and Stan Miller. For more information on them and the show, please visit pinnaclelegacylaw.com. If you like what you've learned today, do share the program with your friends and subscribe wherever podcasts are found.